Did you know that a financial advisor advises against purchasing Tesla stock right now? You should pay attention to the advice of specialists, just as seasoned investors do. Continue to watch and pay attention. Investors are frantically trying to manage their investments to minimize their exposure to the impending recession and inflation. Extreme changes have been observed in the stock prices of several firms, including major players like Apple, Google, and Tesla. Watch today's video to learn why analysts advise against purchasing Tesla stock just now. One of the main manufacturers of electric vehicles, or EVs, is the renewable energy business Tesla. With its electric vehicles, solar power, and integrated renewable energy solutions, Tesla is quickening the global shift to sustainable energy. Tesla is well known for a number of things, such as new safety and pollution laws for cars, advancements in technology, and changing consumer expectations. Despite issues with the supply chain, CEO Elon Musk predicted earlier this year that Tesla sales will easily climb beyond 50 2022 compared to the previous year, thanks to the opening of new factories and the expansion of existing ones. Morgan Stanley, however, raised concerns about the Berlin facility. American Global Investment Banking and Financial Services giant Morgan Stanley assists individuals, organizations, and governments in raising, managing, and allocating the money required to meet their objectives. They issued a warning stating that supply chain problems had caused Tesla facilities to operate below capacity for a number of quarters. Dan Nathan, the founder of Risk Reversal Advisors, a consultancy firm that serves investment banks, advisors, and private businesses, recently discussed his thoughts on purchasing Tesla stock. Upon being questioned about whether he would purchase a Tesla after admitting to nibbling on the triple Qs, he responded, "Nope, nope, nope." He clarified that he had no idea what is going on with the agreement, just like everyone else. He continued by saying that in reality, he detests the names ranking in the top 6 in the QQ. Nathan thinks it will ultimately fall out of that ranking in the future. He continued by saying that he believed there was still more room for growth in Tesla stock and that Musk's reputation at the moment, particularly in light of his contentious involvement on Twitter, was largely responsible for the premium in the stock. Nathan thinks it's a big disaster since Musk wants to buy Twitter, but can't afford it because of the continuous decline in Tesla stock price. In fact, analysts caution that while the valuation of Tesla stock is approaching reasonable levels, it might not remain there for long. Even though Elon Musk is the richest man in the world, Dan Nathan told new Abnormal co-host Molly Zongfast that Musk doesn't have enough money to buy Twitter for $44 billion. As a result, he is selling Tesla stock to raise some cash and will then bring in venture capital and private equity to make up the difference. Nathan claims that the fundamental issue is that the stock is not worth $43 billion, given that all of its publicly traded competitors are seeing daily declines on a plunging NASDAQ that is down roughly 27% year over year. He went on to say that paying that much would be completely pointless unless Musk believed he could take it private, bring in some really astute co-investors, rework the project, and make it a $100 company. But he went on to say that without Elon, all of those private equity firms and venture capitalists who have lined up to co-invest with him will be gone, since part of the appeal is riding his coattails. If he is in fact no longer interested, if Tesla goes too much lower, and Twitter's value sticks out like a sore thumb, being way overexposed. According to Nathan, everyone believes he is a genius who can solve all the major issues. Recall that Musk asked, "Should I sell Tesla stock to pay taxes?" In a tweet, his next tweet, "Should I sell Tesla stock to buy Twitter stock?" came out shortly after, and it actually caused the stock to decline. Nathan is really troubled by this because he believes that Musk is using it all as a giant pretext to sell off a lot of Tesla stock, which he has been doing since last autumn. I think he used Twitter as a big excuse to sell Tesla stock, Nathan says. How do you feel about Dan Nathan's caution? Please share your thoughts in the space provided for comments below. From the standpoint of corporate good governance, Andrew Peretta, a senior analyst at Austin, Texas-based Sage Advisory Services with expertise in socially conscious investments, stated that Tesla has numerous concerns. He went on to remark that there are hardly any checks and balances. Even ardent supporters of Tesla, such as Wedbush securities analyst Daniel Ives, are beginning to have second thoughts. Recently, Wedbush dropped its $1,400 target price for Tesla to $1,000. Ives brought up Tesla's issues in China, where lockdowns have reduced both the demand for automobiles and the availability of essential parts and supplies. There's a new reality for Tesla in China, and the market is reassessing the risks I've stated. The head of ZozoGo, which offers business advice on the electric vehicle sector, Michael Dunn, stated that waning consumer demand in China exacerbates supply chain issues. He characterized Chinese customers as nervous and future-focused. It's a double whammy. What Tesla confronts in China, it unstated. Veteran of the auto industry, Jesse Toprick is chief analyst at Autonomy, a subscription-based provider of electric vehicles. He predicted that by the end of 2023, Tesla's market share will drop below 40. Despite the fact that sales will still rise as the market as a whole does, they will have a similar share of a larger pot, Toprick said, but their near monopoly on EV sales in the US will slowly diminish. Since electric cars made about 13 of new car sales in Europe, Tesla actually confronts fierce competition there already. That portends what may occur in the US, where battery-powered vehicle sales are only now starting to gain traction. According to data prepared by Schmidt Auto's research in Berlin, Volkswagen, which has made significant investments in electric vehicles, sold 56,000 battery-powered cars in Western Europe during the first 3 months of the year, trailing only Tesla, which sold 58,000. Some significant investors seem to be panicking as the price of Tesla stock keeps declining. Buying Tesla stock has a number of significant dangers, according to some. One is the ongoing exorbitant cost of Tesla vehicles. They're not just pricey for buyers to buy, but also expensive for Tesla to produce, since most drivers still cannot afford the prices. Second, given that Tesla executives first had to deal with the issue of not having enough batteries to power their devices, it is very likely that the company will run out of batteries. The famed Gigafactory being built by Tesla is expected to be the answer to the company's battery dilemma, with a projected area of more than 1.9 million square feet. The lithium-ion manufacturing facility seeks to assist in increasing production to over 500,000 Tesla vehicles per year. But logistical and legal roadblocks frequently impede large-scale projects, like the Gigafactory. So it's unclear if the factory will be finished on schedule. To meet demand, Musk has even implied that the business would require multiple locations, such as the Gigafactory, which is still under construction. An additional danger is the cheap petrol price as Tesla's goods compete with cars that run on petrol. Gasoline-powered vehicles are becoming more economically appealing. Petrol costs only need to be low enough to keep older cars on the road in order to negatively impact Tesla's stock prices. They don't even need to stay at decade-low levels. If petroleum-based fuels continue to be a much less expensive option, consumers are less likely to switch to electric vehicles. Competition from other electric vehicle manufacturers is another element influencing Tesla shares. Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are among the corporations who aim to enter the electric car market in the coming years, despite Tesla being the industry leader in this regard. This could lead to some competition for Tesla's market. It's also possible that some tech firms will enter the battle. For example, Apple Inc. Thinks it can compete with Tesla in the transportation space, and Google has also made investments in the vehicle sector. Given that Musk previously stated that Tesla will be spending vast sums of money on capital expenditures, some people are even worried that the company may never be able to recover its huge costs. High capital expenditures are preferred by many investors, but there must be a return on investment. According to Tesla's projection in an SEC filing for the first quarter of 2021, capital expenditures would probably increase to $4, 5 cents billion dollars, or possibly $6 billion annually. Given his excessive controversy, investors have also begun to express concern about Elon Musk, the CEO of Tesla. Elon Musk is mentioned in a note in the same SEC filing that claims he does not give Tesla his whole attention and effort. Furthermore, Musk's impetuous actions have practical repercussions. Musk referred to lockdown limitations as fascist and frequently spread false information about the outbreak. As previously noted, Musk's recent disclosure of ambitions to purchase Twitter alarmed Tesla investors during a call with them about profits. They worry that Musk may eventually lose interest in Tesla. For more information on Tesla stocks, view our other videos.